welcome back to Tax UK, the practical tax channel with myself, Adam Hill. Today, I'm going to be explaining what the cash basis is and how to use it as a self-employed individual. If you are self-employed and you're completing your self-assessment tax return, then you may well come across a question that asks, did you use the cash basis to calculate your income and your expenses? Of course, if you don't have a background in accounting, then this probably won't mean too much to you. But by the end of this video, you'll be able to confidently determine if you qualify to use the cash basis, and then you'll also be able to apply it correctly. Before we do get going today, if I can ask you all to like the video for me, that's really going to help to get it out in front of more people. And if you do find this type of content useful, then you can also subscribe to the channel where we cover lots of UK tax related content that's really going to help you to manage your own numbers. Now, the first mention of the cash basis on the self-assessment tax return comes under the self-employment section. And what you'll find is that below the question, HMRC provide a short guidance or additional guidance, which is supposed to clear things up for you. So let's have a very quick read of this. The cash basis is a simpler way of working out your business profits or losses. You add up all your business income received and take off any allowable expenses paid in your accounting period. If you're a subcontractor in the construction industry, your income is the full amount before any contractor deductions. Now, if that didn't make sense to you, then don't worry too much. You're certainly not alone. So what we'll see if we can do a better job of explaining the cash basis. Technically, there are two different ways to calculate your profit from self-employment. The first is called traditional accounting. And traditional accounting means that you include any income that has been earned and you include any expenses that have been incurred. Now, that might sound very straightforward, but it can actually be a little bit more complicated because quite often you're going to incur expenses today, but you won't actually pay for them until a much later date. And it's the same with income. You can earn income today, but you might not get paid until the end of next month. So this way of accounting requires more thought and more detailed record keeping. The second option is cash accounting or cash basis, which is simplified, and it allows you to ignore when income is earned and when expenses are incurred, and instead you just account for income and expenses that have actually been paid. Now, I'm going to run through some examples on screen for you. So our period is the 6th of April 2021 to the 5th of April 2022, which is the 21-22 tax year. And I'm going to show you the same transactions on this side as we have on this side. It's identical, okay? But we're going to show the treatment under the traditional basis, and then we'll show the treatment under the cash basis, and you're going to see how different these are. So this isn't complicated. We've got an invoice date, the date an invoice was actually raised on. We've got the date that we actually paid that invoice, because quite often you're going to have terms and maybe you're going to pay it a few weeks later. Detail of what the transaction is. And then we've got the amount. And again, it's replicated exactly the same on that side. 4 income transactions or expense transactions and 2 income transactions. Okay, so on line 7, the first one is an expense transaction. We've got an invoice that was received on the 31st of March, and it was paid on the 15th of April. So the invoice date is within the tax year, within our accounting period, but it was paid outside the accounting period. The detail of this transaction is that it's for wages in February 22. Now, February 22 is definitely within our accounting period here. So under traditional accounting, we want to look at this date here. What does the invoice actually relate to? What does that expense actually relate to? And it's February 22 wages. So we definitely want to include this under traditional accounting. Okay, so we'll mark that one yellow. Under cash basis, we're not interested in the invoice date. We're not interested in the detail. We're only interested in the date that it was actually paid. And this one was paid on the 15th of April 2022. So we're not going to include this one because it falls outside of our accounting period. So I'm going to mark this one red, and already you can see there's different treatments under the two different accounting methods. The second transaction, we have an invoice dated the end of March, again paid on the 5th of April, which is within our accounting period. It's on the last day of the accounting period. But you can see that in the detail, this invoice is for a future period. So it's our website hosting for next year, 16th of April 22 through to the 15th of April 23. Okay, so that's in a future period. So that future period doesn't fall within our accounting period here. So under traditional accounting, we wouldn't include that figure in our expenses. Under the cash basis, we don't care about the invoice date. We don't care what it relates to and when it relates to. All we care about is the date that it was actually paid. And under this method, that falls within our accounting period on the very last day. So we would include that under cash accounting. Again, it's the opposite way round. Next up, we've got a transaction invoiced on the 2nd of April. Paid for on the 6th of April. So again, invoice within our accounting period, but paid outside of the accounting period. And it's for timber supply. So we're buying a product here. Now, this doesn't relate to any particular period. We get the product on the 2nd of April here at the invoice date. So really, we're going to go with the invoice date. Okay, we don't care when it was actually paid. Even though we hadn't paid this until after the end of the accounting period, we'd have to go with the invoice date on that occasion. And we're going to include that one under traditional basis. Under the cash basis, we don't care about any of this stuff here. We don't care about the invoice date. We only care about the date paid, and it was paid outside because it's one day after the end of the accounting period. So we're not going to include that one. We're not going to include that 745 under the cash basis. Final one for expenses, invoiced on the 20th of the 5th, so well outside of our accounting period, paid on the 25th of the 5th, so again right outside the accounting period, but it was for a meeting room hire back in February, which does fall within our accounting period. Now, under traditional accounting, we account for expenses when they are incurred, and we incurred this in February, so we definitely need to include that in our accounts or in our expense figure. On the cash basis, we're only interested in one column, and that's this column here, the date it was actually paid. So we're not going to include that because May is outside of our accounting period. So again, it's the opposite treatment. Okay, and you can see how different the two methods are. On to line 12 here. So we've got some income. The same rules apply to income. So first of all, we've got income that we invoiced to a customer at the end of March. That's well within the accounting period. They paid it to us at the end of April, which is outside the accounting period, but it actually relates to services that we provided in March. March definitely falls within the accounting period, so we need to include that. Okay, so I'm going to mark it yellow that we're going to include that. Under the cash basis, you know we only care about the date paid or the date received in this case. So we received this outside of our accounting period after the 5th of April. So we're not going to include that one. So I'm going to mark it red. And then the last one, invoiced within the accounting period on the last day, received in the accounting period, but it relates to future services. It relates to May 22, which is outside of our accounting period. So under traditional accounting, we don't include that. Under cash basis, we definitely include it because it happened on the last day of our accounting period. So we're going to mark that one yellow. So you can see that there's a big difference between the way you account for income and expenses under the traditional basis and how you account for them under the cash basis. And the idea is that there are a lot of benefits for sole traders, for small self-employed individuals. It means, first of all, you only pay tax on income that you've actually received, which is much better for your cash flow. You don't want to be paying tax on income that might never get paid to you. And it also means that calculating your profit figure is much easier. You don't have to go through all this difficult process of figuring out which dates apply. You're just going to go with the date that the amounts leave your bank usually, or if you're paying by check, you can either choose the date that it actually leaves your bank account or the date you actually wrote the check. Now, most of the time, this is going to be an absolute no-brainer for small sole traders because it's so much easier. And for anyone who wants to keep their reporting as simple as possible. But there are some restrictions on this, so it's not going to be suitable for everyone. And you'll find those on the gov.uk webpage if you search for cash basis. The main one is that you need to have a turnover of £150,000 or less in the tax year. Now, if you do have a turnover of less than 150,000, but your turnover starts to grow over time, then normally you'll need to come off the cash basis when your turnover reaches 300,000. So technically, you could be using the cash basis and have a turnover up to 300,000, provided that when you started, your turnover was less than 150,000. But for the vast majority of small self-employed businesses or CIS workers, builders working under the construction industry, the cash accounting or cash basis is going to be very beneficial, and it's usually recommended as well. I hope you found that useful. Thank you all for watching. See you in the next one.